In this video, I want to discuss some of the decisions that are made at the time of the initial reverse with regards to trading the next setup after the reverse occurs, considering that in most cases a trade will not be done at the initial reverse itself. What I am primarily concerned with is whether the trade done is a method setup and also why the trade is done when it's not. For instance, why would a counter momentum reject breakout be traded when method views it being into a PMD? There are three basic decision points that would be made: missing the trade because there is a clean breakout, not taking the trade and then getting a method setup to enter the swing, taking a non-method trade and a losing trade that is even followed by another method setup that then isn't done. Underneath the video you will see a link to a training session that you'll want to listen to. There is a discussion that includes chart structure and a consolidation trade, and there is a discussion about a trade that can't be done and these three decision points. I'm going to discuss this chart period for the following: locating the initial reverses and whether there is a trade setup at any of them. If there isn't a setup at the initial reverse, is there a setup to trade the swing, and if yes, what and where? Are there any possible trades that shouldn't be done? And how do they fit the three decision points? Note, there is no price during the period that comes from the left side and is right side relevant as a start point, price component, price that is being traded into and would keep a trade from having continuation. Our objective for trading is to trade in the area of the initial reverse, as this is the location with the best entry price available to the method in terms of being the closest to a partial profit from the time a trade in that direction may be taken. However, the initial reverse, which often is an indicator reverse only, does not usually have a trade setup for entry. When I do a trade that is an initial reverse, it typically is a start point reject with diagonal breakout potential that is continuation. I do not want to take a start point reject in consolidation, and diagonal breakout potential by definition is not continuation. For instance, it may be directly into a left side price as support or resistance, and then that trade can't be done. Yellow circles. These are the initial reverses during this period. Are any of them the start point reject initial reverse described? No. If you want to call yellow circle 1 a start point reject because of the floor number reject, there is nothing giving real-time continuation on a channel breakout only. Then after the breakout, there is no continuation setup, so if you are short from the left side and also held that trade on the TTM flip at the floor number, then you never get a sell opportunity for this swing. Note that this is the situation that occurred where I was short from the left side and held the trailing contract. Just like an indicator reverse only is not a trade setup by itself, it also may not be an exit by itself. In this case, I am first trailing for the reject of the floor number on the initial test, and if you will look closely at the channels, you can see that there is a channel double top at the floor number to first hold the trade. Yellow circle 2 is an initial reverse only. Yes, it has diagonal breakout potential, but it doesn't have the start point reject. Remember, the trade has to be taken as a real-time decision. Yellow circle 3 is also an initial reverse only, again with diagonal breakout potential and even a right side PMD high. But a right side PMD is not a start point reject because it's not rejecting anything. And the entry would also be a floor number break 1 on the floor number's first test. Yellow dot 1, green dot. When you can't do the initial reverse for entry, you are looking for the next setup in the area of the initial reverse, especially when you have diagonal breakout potential that is continuation to trade into. Certainly this is a double-edged sword, meaning that the diagonal is seen, but something else is ignored. In the case of this trade, it would be the yellow dot after the momentum extreme, meaning that the trade should be viewed as being into a PMD high, and thus that entry timing can't be used. It didn't matter if you'd taken the trade, but that certainly doesn't justify taking a non-method trade, and the actual winning trade comes from the green dot, which is a method setup, and this is the first setup available after the initial reverse. The setup is a PMD failure, still with diagonal breakout potential, that has a first target of the floor number which is partial room and continuation. Yellow dot 2. After the PMD high, yellow circle initial reverse, and no resulting cell setup, the yellow dot cannot be done as a PMD failure similar to the green dot. To begin with, there was the reverse into cell, which may make it a trade through a previous PMD, but this would not be called a PMD failure. Additionally, the trade timing would be before the chart was in buy mode, and the entry in any case would be a floor number break 1 initial reverse. There just is no buy setup at all, and if the next bar went TTM green, there still would not be an actual setup. Note, this is another example like holding the sell trailer from the left of the chart on an initial reverse only floor number first test, as the trailer from the green dot buy was also held on the floor number first test initial reverse. Yes, it could have gone a couple more ticks and have been exited, but that isn't what happened, and the floor number reject, which is why the trade was initially held, is what occurred. Yellow circle 2. This is a trade that I commonly see done as an initial reverse. Yes, it is different than the PMD floor number break 1 reverse shown above, in that there is a floor number reject into the trade. But that being said, it is still an initial reverse, and it does not have a start point reject. The trade would be a floor number reject breakout initial reverse. Additionally, when I see a PMD initial reverse that is followed by a reverse back with left side direction, and then a third initial reverse like is what happened here, I immediately am seeing a transition into consolidation around the floor number, and I want more for a trade entry than the initial reverse reject breakout. Red dot. No, it wouldn't have mattered selling yellow circle 2 like buying the yellow dot, which I will again say is irrelevant to method trading. But like the green dot, I did get a method trade set up, and this time in the same essential area as the initial reverse. Remember those decision points about getting a clean break when there is no trade set up versus still getting a setup to enter the swing? So nothing would have been missed on this chart. Is there really that much difference between the yellow circle and the red dot? Watching the chart real time, being long at the time, and with the visualization of consolidation of the floor number, yes, I think it was different. And it gave me the opportunity to see a trade setup. There was a second reject of the floor number, giving the 2 purple squares and what I call a tweezer reject with MEX flow and an indication that the floor number is shifting, rejecting, instead of straddling, with the continuation that I can trade into versus trading in the center of what becomes consolidation. Remember that this is about visualization and trading decisions that are made real time. How can you make these decisions? It is based on how many times you have seen a similar situation. And what is the typical outcome, meaning what happens the most times out of 10? As I mentioned at the beginning, there are 3 basic decision points that would be made. Missing the trade because there is a clean breakout, which didn't happen. Not taking that trade and then getting a method setup to enter the swing, which did happen. Taking a non-method trade and a losing trade that is even followed by another method setup that then isn't done. Not an issue in this case, but it would happen more frequently than a clean breakout and no opportunity to enter. Left chart. What happens most often? The yellow dot buy into a PMD breaks out without getting the PMD failure and green dot buy above. The yellow dot is a trade loser and the red dot sell after the PMD high that then becomes a missed winning resumption trade that isn't done because it would have to be done so as a reverse. There is no reason to take the yellow dot because of the fear of a missed clean breakout versus the other 2 considerations. They happen more often. Right chart. What happens most often? The yellow circle initial reverse breaks out without going into consolidation or without getting another retest after the initial reverse and the red dot sell above. The initial reverse as a loser and the green dot buy is a floor number failure swing resumption that then becomes a missed winning resumption trade that isn't done because it would have to be done so as a reverse. There is no reason to take the yellow circle because of the fear of missing a clean breakout versus the other 2 considerations. They happen more often. Anytime you are taking a non-method trade or you are taking an initial reverse only based on being afraid that you are going to miss a clean breakout with no additional opportunity as the higher odds occurrence, you are making a decision that isn't correct, or it wouldn't be a decision point or method filter to begin with, and you are increasing the number of losing trades plus missed winning trades that you could otherwise have. Taking a trade that is not a setup because of some fear like missing something has to be one of the worst reasons that you could have for taking a trade. It isn't a method decision.